Hello everyone, welcome back to Today Daily Analysis. Today is day 12, August 2024. Starting off with dollar index, after a bit of a rise earlier this week, the US dollar has started to slip back into the red. Right now, the technical indicators are showing some warning signs. Last week, it closed below a key level, the 200-day moving average, which could signal more downside ahead. The dollar index recently hit a high of around 103.54, but faced some selling pressure just above that. If it continues to fall, we're looking at potential support levels at 102.86 and 102.35. On the other hand, if the dollar can hold above 103, it might push back up towards resistance levels at 103.56 and even test 104. So what does this mean for you? Well, with no major economic data expected this week, the market will likely be influenced by headlines and geopolitical events. All the eyes are on the US CPI and the retail sales data coming out this week. So the weekly close of the dollar index will be crucial. So stay tuned for any sudden movements. For crude oil is making a comeback after a recent plunge, mainly due to rising geopolitical risk. Tensions are high as Israel prepares for potential retaliatory attacks from Iran. However, there's a glimmer of hope. A recent call between the Iranian and French presidents could open up a path to de-escalation. Another factor adding to the uncertainty is the situation in Libya. The closure of the Sharara oil field continues with no end in sight. Meanwhile, China's demand for jet fuel is a bright spot, with the air traffic up 14% in June compared to pre-pandemic levels. On the technical side, WTI oil prices have been climbing, posting gains for 3 straight days last week. The key level to watch on the upside is the 200-day simple moving average at $78.19. If prices break through this level and close above it, we could see push towards $79.46 and even the $80 psychological barrier. If it's not all bullish, the 14-day RSI indicates there could be some room for another decline. On the downside, keep an eye on $75.49 and $75.08. If the prices drop further, we could see a move towards $72.99 or even $72.10, which was the low in August. If that level breaks to $70 is the next key support. For spot gold, after a sharp drop in the beginning of last week, the gold prices have bounced back, now approaching $2,430 per troy ounce. Despite early week turbulence and hopes for interest rate cuts, gold briefly dipped below $2,400. But it's important to keep perspective. Since the start of July, gold have proven itself as a safe haven, trading higher and inching towards a new all-time high. The ongoing tensions in the Middle East are keeping demand for gold strong, providing solid support for prices. We're also keeping an eye on the upcoming CFTC data, which could show a reduction in speculative long positions after last week's sharp drop. This might indicate that gold was sold to generate liquidity in response to losses in other investments. Looking at the daily chart, gold is currently trading around $2,426, moving sideways within a range of $2,368 to $2,487 over the past month. The 50-day exponential moving average near 2,371.4 continues to offer support to the bulls. The 14-day RSI is fluctuating between 55 and 60, showing some indecision in the market. On the upside, if gold breaks through the resistance at 2,450 and 2,452.9, we could see it rise towards 2,477.7 and even challenge the previous highs of 2,483.7. On the downside, the key levels to watch are 2,480.4 and 2,400, which continues to be strong support levels. If this support breaks, the next target would be 2,390.7 and 2,379. For lastly, AUD/USD, last week the RBA, Reserve Bank of Australia, kept the official cash rate unchanged, but the tone was hawkish. Governor Bullock made it clear that the policy needs to remain restrictive to curb persistent inflation. The rate cuts aren't on the horizon, and the central bank is prepared to raise rates if necessary. This hawkish stance, combined with strong Chinese inflation data, helped the Australian dollar make a V-shaped rebound above 0.66 last week. From a technical perspective, the 14-day RSI in the negative zone is at 46. However, the bearish momentum has eased slightly, indicating that the AUD-USD might be pausing its decline and could be set for a recovery. If the pair continues to gain strength, we could see it test key resistance levels at 0.6595, 0.66, and 0.6601, which align with the 200-day and 100-day moving averages. Beyond that, the next targets could be 0.6625 and 0.6619, with 0.67 acting as a significant round number level. On the flip side, if the bearish sentiment returns, AUD-USD might retest support at 0.6532 and then 0.65. A break below this could see the pair move towards 0.6453, which is the 23.6% Fibonacci rebound level. With the Australian economic outlook remaining complex, the market continues to expect only modest easing in 2024. Thank you for watching, and don't forget to subscribe for more forex updates.